So good to have you join us today. Hello and welcome to Business Daily. I'm Minjoo in Seoul. We have a lot on our plate today, so let's get started with a look at the day's highlights. More coming out of the ongoing Lotte Group probe as prosecutors are now looking into suspicious transactions made with the shell company in Vietnam. Up until now, Korea had slashed its corporate tax rates with hopes of boosting business competitiveness. But now there are growing calls to push those rates back up. We find out why with an expert. But first, our top story. The government has announced that it will scrap plans to build a new airport in the country's southeastern Yeongnam region. Instead, it will boost the capacity of Kim-hae International Airport in Busan to accommodate the growing demand for flights in and out of the country. The decision comes after years of bickering. The prospect of building a new airport in either Miryang, close to Daegu, or Gadokdo Island near Busan had become a political hot potato in regional elections back in 2010. At a press conference earlier this afternoon, the French airport design firm ADPI, which had been tasked to review potential sites in the region, explained neither sites had the terrain nor capacity to meet the demand for projected traffic of 40 million passengers a year. Instead, additional runways and terminals will be built into Busan's existing Kim-hae Airport. A development master plan is scheduled to come next year. Korea's ruling party and the government have agreed on the need to spur growth through more active measures that could involve drawing up a supplementary budget this year. Meeting at the National Assembly on Tuesday, ruling party officials asked the government to seriously consider allocating extra funds for youth job creation and for workers who might be affected by the government-led restructuring of ailing industries. The lawmakers, who are from a special job creation committee, asked for stronger fiscal support in the form of a substantial extra budget, especially in light of monetary easing from the central bank. In response, Vice Finance Minister Choi Sang-mok said the government agrees on the need for stronger measures and that it's reviewing the role of fiscal support. Moving on to the ongoing investigation into the country's fifth largest conglomerate. Seoul prosecutors are looking into whether Lotte Group's business units were involved in dubious transactions involving shell companies to create slush funds. Our Kim Min-jae is on this story for us today.
Lotte Group has been found to have engaged in suspicious transactions in Vietnam involving a paper company. In 2014, Lotte invested some 400 million US dollars to establish Lotte Center Hanoi, a 65-story complex with a 5-star hotel and apartments, a department store and offices. While the complex was being built, Lotte Asset Development, the group's property development arm, bought a paper company named Corliss in Luxembourg for about $60 million. The purchase gave the business unit the right to use and develop the land on which the complex was built. Later, Lotte Shopping and Hotel Lotte each bought 45% of the shares of the paper company, leaving Lotte Asset Development with just 10%. The combined book value of the 3 unit shares is roughly 100 million. But last year, the paper company posted a net loss of about $50 million, and Lotte was criticized for going ahead with the business project while bearing the financial burden. Prosecutors are looking into whether Lotte Group used the special purpose company to inflate the losses and whether it used the extra money to set up slush funds for the owner family. Lotte Group has brushed off allegations, saying that SPCs are set up to help the parent company comply with local regulations when it's involved in overseas investment and development projects. As the investigation progresses, the fate of the founder's 2 sons will be determined at an upcoming shareholders meeting this weekend. The shareholders of Lotte Holdings, the group's de facto holding company based in Tokyo, will meet on Saturday to vote on whether to dismiss Lotte chairman Shin Dong-bin. The issue has been brought to the table by Shin Dong-ju, the eldest son and Lotte Holdings' former vice chairman. The younger Shin has long had shareholder support, and they voted in favor of him at 2 previous meetings. But with the investigation continuing, all eyes are on the impact it will have on shareholders and whether they will change their minds. The elder Shin was stripped of his executive titles at 3 of Lotte's units early last year, and has since been struggling to claw his way back up to the top. Kim Min-jae, Business Daily.
Korea's financial watchdog has released a report that shows young Koreans are seeing a rapid increase in mortgage loans at a time when interest rates sit low and lump sum deposits soar. Our Lee Joo-young breaks it down for us.
Younger Koreans are emerging as major borrowers in the home mortgage market. According to the Financial Supervisory Service, the mortgage balance of those in their 30s amounted to $87 billion as of March this year, up by 11.5% since the end of 2015. The total outstanding mortgage for people in this age group increased by roughly $13 billion in the year 2015. But just in the first 3 months of this year, that figure has already exceeded $9 billion. This trend is also noted among borrowers in their 20s. From $5.6 billion as of the end of last year to roughly $8 billion, their mortgage balance has surged nearly 45% in just 3 months. This is in stark contrast with the mortgage balance of those in their 40s, which inched up by only 1.3% in the January to March period, while figures for those in their 50s and 60s fell. Despite government measures to curb household debt with stricter borrowing guidelines, a growing number of younger people are opting to buy their homes as opposed to paying monthly rent or managing skyrocketing lump sum 전셋 deposit deals.
Homeowners want monthly rent, but that's a big burden for me. So I thought since the interest rates are low, I might as well buy my own home.
In light of this trend, there have been growing voices of concern about younger generations being weighed down by mortgage payments at a time when they should be saving for future spending. Lee Joo-young, Business Daily.
Are we going to see an increase in corporate taxes? There's growing debate over this issue in the new National Assembly, amid criticism that measures taken by Seoul's previous administration to cut corporate taxes had only benefited large companies. Let's find out what this is all about.
The liberal main opposition Minjoo Party of Korea's chief policymaker Jung recently submitted a tax code revision bill to raise the maximum corporate tax rate. The amendment calls for a hike on corporate taxes from the current 22% to 25% for large firms with taxable income of more than 50 billion won, or about $43 million. Under the previous Lee Myung-bak administration, the corporate tax ceiling was cut to 22% from 25% to spur investment. But there has been criticism that the tax cut has failed to boost investment and that it's only allowed big companies to grow their cash reserves. The minor opposition People's Party, however, has remained reserved on the issue, while the conservative ruling Saenuri Party has strongly opposed the tax increase, saying it would further weaken corporate activities and hamper economic revitalization. So will a change in the country's corporate tax rate help businesses enhance their competitiveness? We'll take a closer look.
And to tell us more about this, Professor Yang Jun-seok from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
So how does a cut in corporate tax rates help businesses? I mean, obviously, in immediate term, it does help to bring up their bottom line. But what other benefits does it bring with it?
Okay, well, a lot of people argue that because if they have more profits, they have more money to plow back into investment or give dividends to their stockholders. Now, critics mention that sometimes these effects are not as large. We've seen that in Korea. Also, when I was in university, we argued about whether corporate taxes were double taxation. So the corporate profits get taxed at the corporate stage, and then when they're given out as dividends, then they get taxed as personal income or financial income. So in that case, firms would and stockholders would prefer that the company keeps the money in cash in the company. So we have problems like that. Also, a lot of critics, we have to realize that the corporate taxes by itself does not necessarily determine how much investment a company makes. It also depends on things like productivity. So you have countries with fairly high corporate taxes, but they still have healthy economies because their productivities are high.
Now, there are some saying that corporate tax reduction that we saw under the Lee Myung-bak administration didn't really have the desired effects, and that actually there was no trickle-down effect on the overall economy.
Yeah, well, we also have to remember that it wasn't just the Lee Myung-bak administration. The previous two administrations, they lowered corporate rates as well. When we look at some of the economic literature behind corporate taxes, it's mostly done in the United States, but they've been able to catch the negative effect of raising tax rates fairly well. But the pro effects of lowering taxes, they've been somewhat harder to find, at least in the data. At least for the United States, when there's a recession, corporate tax cuts seem to help. But when the economy is going well, corporate tax cuts don't seem to really do any good at all. So maybe that's what we're seeing here.
Then how would raising corporate tax rates help to boost the country's fiscal soundness? I mean, do you think it outweighs the effects of maintaining a lower rate?
Okay, well, the government actually gave out a project to Korea Institute of Public Finance. And what they found was that, when they have a 1% rise in corporate taxes, it leads to about 1.1% reduction in growth rates. So in that sense, the increase in taxes will have more direct revenues, but because the economic growth rate falls down, they might have less revenues. We'll have to see how that nets itself out. But usually, I think a lot of the problem here is political because, the opposition party wants to increase the social safety net, it wants to increase social spending, and the government has been using the lack of budget and the possibility of debt crisis in the future as an excuse not to increase government expenditures. So they've been looking at a way to try to find a way to increase revenue so that they can increase expenditures, and I think this is one way that they found of doing that.
Now let's look at the big picture then. Compared to other major economies, where does Korea stand in terms of corporate tax rates?
Okay, well, Korea, according to the OECD, stands about in the middle of the OECD countries.
Okay.
We're at 22% top corporate tax rate. I should emphasize that this is the top rate. And the United States has about 35%. Japan has about 23.4%. Germany has 15.8% and Ireland has 12.5%. And the average is about 23.1. So we're about the average here. And then there's a lot of mention that countries like Hong Kong and Singapore actually have a lot lower rate, 16.5% for Hong Kong, 17% for Singapore, and they have a very thriving service industry, financial industry. So that's, but on the other hand, these only count the top corporate rates.
Okay.
Now, when we add things like welfare taxes, which are on top of these corporate taxes, and when we have, for Korea, we have local taxes, which are also on top of the corporate taxes. Sometimes the tax rates change drastically. I mentioned that U.S. had a 35% rate. A consultancy has a very interesting website, and they include corporate rates, which includes all these other types of taxes as well, and they calculate that the U.S. corporate taxes, including all these subsidiary taxes, is about 40%.
Okay.
And then Germany, which only has 15.8% corporate taxes, has about 29%
29.
corporate tax rate. So it's really difficult to tell with the tax rates where Korea is. And also there's a slew of loopholes. Korea has some, and United States, every other country has some. So it's very difficult to get a real picture on exactly what the burden of the corporate tax rates are.
Then I think we can all agree that both arguments for a tax cut and a tax rate hike have the same goal, except they have a very different approach to it. So what would be the underlying logic between these, or for these two policies?
Okay, well, the policies for lowering the corporate tax rate is fairly direct. More money that company has left, the more money they have to invest, more profit, more attractive investment for not only the company but also for investors. On the other hand, the people who are against increasing the tax rate, they point out that it's not necessarily just the tax rate which determines investment. It's also productivity, and also the increase in tax rates can. So it's the productivity, and also the expenditures on government expenditure side may not do that much good. So there's a big conflict over not necessarily what the effects are, but how big are those effects going to be.
All right, and there are also other options on the table, like raising income tax rates for higher income earners, as well as a new temporary surtax. What are your thoughts on these options?
Okay, well, I think when you're doing macroeconomic policy, especially in a situation like we see here, where a lot of the slowdown or recessionary effects are due to reduced demand, you shouldn't have to balance the budget every year. I think the whole key to having macroeconomic demand policies is that, well, when the country is in trouble, you run up deficits so that you lessen the shock of the recession. And then when you're in good times, then you increase government surplus to make up for that deficit that you had in the past. So you're aiming for a balanced budget over the business cycle. And right now, because we've been in the recessionary period for so long, I know people are getting worried, but I think focusing on a balanced budget is actually not a good time right now. So I don't think it's an appropriate time for taxes, especially taxes which cut down consumption, like extra value-added tax. Right now, I think the key should be trying to get the economy, trying to get the demand reinvigorated, and that means we're probably going to have to stand some more government deficit for the near future.
All right, so we'll definitely keep an eye on this revision bill that was submitted by the main opposition party and see where it goes from here. Thank you so much for coming in today.
Thank you.
And that brings us to the end. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.